Batman. Batman.
Aweh, Millionaire. It's me, and I'm back today with another smart trader analysis, another smart trader setup. And today's trade that we're going to be looking at, today's currency pair we're going to be analyzing is gold. Okay, it's XAUUSD analysis today, and in this video I'm going to show you how to trade gold using supply and demand forex. So I've recently identified a setup on gold, and I just quickly want to go through the setup. I want to explain exactly what I'm looking at so that you can take some valuable tips, learn some tricks, and obviously apply it into your trading routine. Like I always say, if you want to know how to become a more consistent and profitable trader and learn the advanced professional tips of how to do so, then start now by subscribing and clicking that bell so that you don't miss out on anything. So on gold right now, I'm long. I've just bought gold. As you can see, here's my entry price, TP and SL. And yeah, it's all about supply and demand forex. So let's crack straight into the analysis so you can see exactly what I'm looking at and what you should be seeing as well as a smart trader, because that's what we do as smart traders. We trade with we trade like smart traders, and we follow the smart money. So I'm going to go to the 4-hour time frame so we can start off. Always we start off with our key interest levels, being supply and demand in this scenario. So supply and demand, more specifically in this video, I am looking at the demand levels on gold. So I found a demand zone on gold, and here it is on the 4-hour time frame. There's a demand level over here as well as another demand level over here. Starting off on the 4-hour time frame to identify these levels, and then as always we go to the 15-minute time frame to plot out exactly where those price points are, exactly where the smart money is at. So the first level of demand which I identified was on right over here on the 14th of May. Again, I'm using supply and demand and forex volume, and if you want to know exactly how I identify these levels like a smart trader and how you too can also do that, then all you need to do is click on the link in the description to get your hands on the free video training, which will give you the 4 easy steps of how to make this happen. So demand level number 1 on the 14th of May. And then if we head over straight to what date is this? The 15th of May. I mean, look at this. Very easy. FX volume, demand level, another demand level over there. So we've got a demand zone from the 14th and the 15th of May. And let's look at exactly how this setup played out. So we can see exactly when we see a setup like this in the future. Okay, now when you see a setup like this in the future, what exactly you need to be doing in order to capitalize off these easy setups. So what we had over there on the 18th of May, okay, we had price come down to test this demand level, okay, to test the demand zone, and it tested this demand zone with perfection. And what do I mean by perfection? I mean high volume. Boom, skibbity pap, tested the demand level with high volume. When price tests a demand level with high volume, this is an indicator for you to be looking to buy. Okay, demand level testing with high volume is a buy, supply level tested with high volume is a sell. So price came, tested the demand level on the 18th of May. Okay, came and tested the demand level, and as we can see here, was testing it and started to consolidate on this level. It started to consolidate on this level. Okay, we see price consolidating in the zone over here, consolidating on the demand zone. Okay, and this is when I actually saw the setup, was yesterday. Last night I saw the setup happening, which is actually when I got into the trade. And again, what I saw was price consolidating at the demand level. Okay, and then I started to see price push off the demand level. Okay, not only did it push off the demand level, okay, the buying momentum, buying pressure started to unfold. It also started to do so with high volume. Okay, price action validated by the volume. Okay, this is how smart traders trade. We use FX volume to help us, to tell us exactly what the smart money is thinking. So what is the analysis over here? The analysis is pretty simple. Price coming down to test the demand level. So number one, we know what the dumb money is thinking. The dumb money is thinking to sell because they see prices coming down. But you as a smart trader, you trade with the banks and you see that price is testing a demand level with high volume. So you do the opposite of a dumb amateur trader and you trade with the banks, you trade with the smart money, and you look to get into buy. Okay, and this is when I got into buy, when I saw price bounce off the demand level with increasing volume, skibbity pap, hit the trigger, and as we can see over there, entry price. Again, if you saw this trade earlier, there were so many points for you to enter the market. Okay, this is where I entered, but you could have entered over there. You could have entered at that fractal high over there. You could have entered that fractal high. You could have entered that fractal high, whatever fractal high you wanted. Okay, and when we put our stop loss, again, entry and stop loss, we use our most recent fractal high as our entry and most recent fractal low as a stop loss. But because price was consolidating off the demand level, you want to put your stop loss outside of that zone. Okay, you want to put it comfortably outside of that zone. Okay, you want to put it in the middle of the consolidation where there's a high probability that you could get stopped out. To put it outside of the demand level, outside of the zone, to protect your trade, okay, and to increase the probability of the trade continuing to not get trapped by stop hunts. Okay, so there we go, stop loss over there outside of the zone, entry price, and then TP as always, how you wanted to do it based on your reward to risk. And yeah, price is in a little bit of a profit, not much as yet, but again, once you place your entry, once you place your stop loss, once you place your target, you let the smart money do the rest. You let the banks move the trade how it's supposed to move. Okay, and that's how you trade gold using supply and demand forex. Nice and easy. Another day, another dollar. Trade like a smart trader and follow the smart money. Aweh Millionaire. If you enjoyed the video, leave a like, comment, and subscribe, and hit that bell. Batman, Batman, Batman.